In a divorce proceeding, the first step to calculating the equalization payment is to complete a Form 13-1 or a financial statement. The form has two parts. The first part of the form itemizes your income and expenses. Disclosure must also include 3 years of personal income tax returns and notices of assessment. The second part of the form calculates what's known as the net family property, which essentially is the growth in the spouse's net worth from the date of marriage to the date of separation. The values of each of the assets and liabilities need to be disclosed at 3 discrete dates: date of marriage, date of separation, and at a current date. Net family property is the growth in a spouse's net worth from the date of marriage to the date of separation. First, you list the values of all the assets at the date of separation. These would include bank accounts, RSPs, TFSAs, home, cottage, brokerage accounts, business interests, money owed to the spouse, and so on. Next, you deduct all liabilities at the date of separation. These include loans, credit cards, mortgages, and monies owed to the CRA. Also include contingent liabilities. For example, you can take into account the contingent income taxes that will ultimately be paid on the withdrawal of the RSP funds upon retirement. The next step is to deduct the net worth at the date of marriage. So this involves setting out the assets and liabilities at the date of marriage. Another deduction is allowed for excluded property, which generally includes gift and inheritance from third person during the marriage, damages and settlements from personal injuries, and life insurance proceeds. The total represents a spouse's net family property. In order to explain how the equalization payment is calculated, let's walk through an example. Jim has a net family property of $800,000, Meg a net family property of $200,000. The difference between the spouses is $600,000. In order to equalize, the spouse with a larger net family property must pay an equalization payment of half the difference to the other party. In this case, Jim, who has the high net family property, must pay half the $600,000 difference, or $300,000, to Meg. The final result after equalization payment of $300,000 will be that Jim and Meg will each have $500,000 of net family property.